This is your LMAX Exchange technical update for Friday, August 26, 2016. Euro dollar. So there are signs of the euro potentially wanting to top out after stalling out above 113 and ahead of 114, though there is still risk while the market holds above the 100-day moving average for another push towards some key medium-term internal resistance around the 1400 area. 114.28 is the next key resistance above. That's the June 24th high. If we see a break and establishment above that level, then it could open the door for a retest of the 2016 peak at 116.17. But until then, while the market holds below that level, there is risk for another topside failure and break back below the 100-day moving average and down towards recent range lows in the 109s. Again, only a back above 114.28 ultimately would negate the overall bearish bias, while there is, though, still scope for a move and a push towards the 114 area. Sterling dollar. So cable has rallied up in recent sessions after stalling out ahead of the plus 30-year low from July, with the market, though, unable to really establish above some critical resistance, which comes in at 33.72. Overall, this market is confined to some bearish consolidation within a more intense downtrend, and deeper setbacks are expected below the recent plus 30-year low from July and down towards the 125 area. Only a close back above 133.72 would compromise the immediate bearish outlook. Dollar yen. So dollar yen is showing signs of a bit of a consolidation in recent trade. Overall, the downtrend remains firmly intact, and the market should see the next downside extension back down towards the recent 2016 and multi-month lows at 98.99, and then opening the door for 95 below there. At this point, only back above some recent resistance and an anticipated lower top at 102.65 would negate the bearish outlook. Euro Swiss. So Euro Swiss is trading back towards the top of a key range that's been defining trade over the past several weeks, and really it would need to establish a break above 109.45 or a daily close above 109.45 to suggest that this range trade is over. Until then, look for another topside failure here up above 109 in favor of another downside towards the range lows in the 107s. Only back below 107.78 would compromise the outlook on the downside. Aussie dollar. So Aussie looks to be carving a lower top at 77.58 below the 2016 high and could be declines over the coming days and weeks. At this point, look for deeper setbacks towards initially the 74 to 75 area with a break below there to then accelerate down towards some more critical support just ahead of 74. Dollar CAD. So dollar CAD appears to be carving out a major base, and the market looks to be establishing a next higher low at 27.64, the low from last week, ahead of the next major upside extension back above the recent range highs that we saw at 31.89 and above that recent high that we saw on the 27th of July, which comes in at 132.54. At this point, only back below 26.55 though would compromise the constructive outlook for dollar CAD. Kiwi dollar. So Kiwi continues to stall out on rallies above 73, and although we've seen a 2016 high in recent trade at 73.45, inability to really establish a clear market above 73.45 suggests the market could once again top out ahead of the next major downside extension. At this point, again, only back above 73.45 on a close basis would really compromise this topish outlook for Kiwi dollar. SPX 500. So the S&P 500 has been consolidating off record highs in recent trade. At this point, there is signs of exhaustion and a potential top, but ultimately we would need to see a break back below 21.47, that low from the 2nd of August, to really strengthen this outlook and accelerate declines. Until then, there is risk for additional upside and fresh record highs above 2200. Gold. So gold has seen some setbacks this week, but ultimately here the overall outlook is highly constructive, and the market should be very well supported into the 1300 area in favor of that next major upside extension back above the 2016 high at 1375 and towards 1450 further up. Again, only a close below 1300 would really compromise the constructive outlook.